Where do we get the expenses? Look at the receipts and payments on the credit side. On the credit side, we have motor vehicle. In note number 3, motor vehicle, we have note number 3. Note number 3, we read depreciation policy is on reducing balance basis at the following rates. Motor vehicle 10%. So we need a working for depreciation. We need a working for depreciation. Reducing balance. Reducing balance. Motor vehicles. So working number 6. Depreciation. Beginning with the motor vehicle. What is the rate? So it's supposed to be 10% on reduced balance. So what is the reduced balance of motor vehicles? Reduced balance. The reduced balance. We are not given any information on motor vehicles, or they are not given the accumulated depreciation. So assumption is that the motor vehicles of 20 million in 2023 at the beginning, that is the reduced balance. So 10% of 20 million, 10% times 20 million, that is the depreciation for motor vehicles. Then the rate for equipment is 20%. What is the reduced balance for? But there was a purchase of motor vehicle. Yeah, there was a purchase of motor vehicle. Now we need to adjust that candidates. So the purchase of motor vehicle, George, you need to be very careful. There is an existing motor vehicle in note number 4. Existing motor vehicles in note number 4 at the beginning is 20 million. Do you see that? 2023. Then when we look at the receipts and payment, we have 26 million value of motor vehicles that were purchased. So that those are new motor vehicles which also should be depreciated. So we are going to apply the 10% on 20 million plus 26 million. So what will be the depreciation? Then you have equipment. What information do we have on equipment? The rate is 20% of reduced balance. In note number 2, we read that during the year ended 30th June 2024, equipment with a net book value of 600 was disposed of for 800. So we have to deduct that 600 from the equipment. Look at the equipment in 2023 at the beginning. The equipment there is 14.4. Do you see that? Look at this 14.4. This is 13.4 million. We have to deduct the 600,000. Let me write it in full. 14,400 million. We deduct the 600,000. Then we apply the 20%. So that will give us the depreciation for equipment. Please pay attention. I'm going to repeat the depreciation on equipment. At the beginning of the accounting period, we have equipment valued 14.4 million, 14,400,000. In note number 4, the equipment at the beginning of the year is 14,400,000. Then when we move to note number 2, during the year ended 30th June, equipment worth net book value of 600 was disposed of for 800. So we need to deduct the 600 from the 14,400, because that equipment is no longer in the business. You cannot depreciate it because it was sold. So we deduct it, we get the net, then look at the board, we apply the 20%. Now give me the depreciation for motor vehicle and equipment. What is the depreciation for motor vehicle? Motor vehicle 4,600. Depreciation. Motor vehicle 4,600. Equipment. What is depreciation on equipment? 60. 2760. So let's move on. Where? Here. Now this, I'm doing workings here, so we don't need this. That is the depreciation. Then we check for any other expense. Now look at the question, note number 4. Now before note number 4, look at the receipts and payment. We have motor vehicle on the credit side, then we have water and electricity. So the next expense is water and electricity. So water and electricity, we have balances in note number 4. That means we have to get a working for water and electricity. What's working number 7? Water and electricity. There is a balance on electricity, accrued balance at the beginning and at the end. So at the end, we record it here. Balance, balance carried down at the end. Sorry. At the end is 400. Accrued. Accrued at the beginning. We have accrued at the beginning. Accrued electricity. Accrued electricity at the beginning is 400. This is 400. Then at the end it's 520. At the end is 520. Then from the receipt and payment, water and electricity paid 3520. So the bank was credited. Then this is debited with receipts and payments of 3520. So give me the balance on that account. That is what we take to the income and expenditure. How much? $36.40. So $36.40. Just below the water and electricity, we have secretary honoraria. Secretary honoraria is the next item. Secretary honoraria doesn't require an adjustment. Secretary honoraria, the amount is $720. Below secretary honoraria, you have bar wages, which we adjusted. Then you have staff salaries. Staff salaries do not need any adjustments. Salaries No adjustment required. How much? 12,800. Below salaries, staff salaries, we have bar payables, which we adjusted. Then there is bar payables, that's not an expense. Then there is ground maintenance. That is an expense of 4.4 million. Insurance is an expense, and insurance, we have additional information. The third last item, we have accrued insurance. So we need a working for insurance account. Accrued at the beginning, we credit. Balance brought down. Accrued at the beginning, insurance is 800. At the end, balance carried down at the end, insurance 1200. The insurance paid in the receipts and payment is 4.8. Receipts and payment 4.8. Give me the amount to take to the income and expenditure. The balancing figure on that account. How much is it? This is 6 million minus 800, 5,200. 5,200. Insurance, 5,200. Do you have any other expense? No. Do you have any other expense in the notes? Any other expense in the notes? No. So give me the total expenditure. What is the total expenditure? Deduct this total expenditure from the total income. Do you have a surplus or do you have a deficit? Give me the total. George, bar wages were deducted in the bar profit and loss, so you don't do double entry here. We already deducted, then the profit was transferred to the income statement, so it was factored here. The bar profit, we deducted the bar wages to get the bar profit, so the 7160 is net of the bar wages. That clear? John says 34,120. This is 34,120. So what is the, because for them this is a surplus. The expenditure is less than the incomes. The incomes exceed the expenditure, so we have a surplus of, John says 24,840. 24,840, and this will be transferred to the statement of financial position. So that's it. We can now prepare the statement of financial position. And I think we can do it here. That space may not be enough. Can prepare it here. Vijana Youth Club. This is part C of the question. Vijana Youth Club. We are now doing the statement of financial position as at 30th June 2024. So we know statement of financial position is the equivalent of the balance sheet. Here we present the assets, liabilities, and capital. So we begin with the non. One, two, three. One, two. So we begin with the non-current assets. Non-current assets. Let us identify non-current assets from the question. Give me the question. And note number 4, can you see land? Land at the beginning is 10 million, at the end is 10 million. We have no information on depreciation on land. So it's just 10 million. Land, 10 million. What else? Note number 4, motor vehicles. You have motor vehicles. Now motor vehicles, there is a question mark on motor vehicles, which means we need to have a working. We need a working for motor vehicles. We need a working for motor vehicles. Motor vehicles. So we have existing motor vehicles. In note number 4, existing motor vehicles, these are motor vehicles at the beginning. It's 20 million. Then there are new motor vehicles that were purchased. New motor vehicles in receipts and payment, the 26 million. So we add this 26 million. Do you see that? 26 million. So that will be the total. It is 46 million. Then we are going to deduct the depreciation so that we have the net book value. We have the depreciation of motor vehicles of 4,600. 4,600 deduct. That will give us the net book value of motor vehicles. How much is that? Deduct this. That will be the net book value for motor vehicles. What is the amount? 41,400. Net book value motor vehicles 41. Did you say 200? 41,200. 41,400. 4. So motor vehicles here will be economical space. Motor vehicles 41,400. The next non-current asset is equipment. Equipment. Equipment again, on this date there is a question mark. That means we need to have a working for equipment. Equipment. Equipment is 14,400. So equipment. So equipment at the beginning at the beginning, you can see we have equipment valued at 14.4. Then we read in note number 2 that 600 was disposed of. Disposal of 600. That will give us a balance, which is it 13,800. Then we deduct the depreciation of equipment which we calculated here, 2760. Deduct 2760 to get the net book value. So what's the net book value? Equipment net book value, how much is it? 11,040. So this is 11,040. So equipment 11,040. Now below the equipment we have investment. We have the investment cost. Investment cost. Do you see that? Do you have any other information on investment cost? Not number 1. We read in note number 1 that investment income of 10% per annum is receivable. Okay? Investment income is receivable. So there are 2 ways of doing adjusting that. So this is what do what is. Investment. So working for investment. Now the investment at the beginning, is 40 million. At the end is 40 million. So this is investment cost is 40 million. Then in note number 1, investment income of 10% per annum is receivable. So that is investment receivable. Investment receivable we've seen is 10% of the 40 million. 10% times the 40 million, which is 4 million. So we just add it to this to get 44 million. It is receivable. The club is entitled to 4 million. It was not received. It is receivable. So we add it to the investment cost. It may generate more interest in the next accounting period because we are not told that it was withdrawn. It is receivable, means it is yet to be received. So investment is 44 million. Can you identify any other non-current asset? There is no any other. Give me this total. Then we add the current assets. First one is buy inventory. The buy inventory at the end is 1440. Any other Now another current asset should be the subscriptions in arrears at the end. These are money that are expected to be received from the members they have not paid. It's like they are owing the business the 1480 subscriptions in arrears. This is 1480 at the end. That is an asset. What else do we have? What else do we have? Current. We have the bank. The balance on the receipts and payments at the end is what we are referring to as the bank. And you can see, check the receipts and payment, you can see there is a question mark. There is a question mark. That means we need to calculate it, not given. We have to calculate. And I can see the total on the debit side is 88 million. Then we have 26. Can we deduct 26 from 88 million? Deduct 26. Let's have the balance on that account. We needed to calculate it. 26 minus 3520 minus 720 minus 2800 minus 12800 minus 29600 minus 44 minus 48. What is the balance? 1064. Give me the bank balance. George says 3360. Is there any non-current assets? If there is none, give me the total non-current assets. Add to the non-current assets. That will be the total assets. Then we go ahead and calculate financed by 6280. This one is 6280. And give me the total assets. 112,720. 112,720. Financed by accumulated fund. Financed by accumulated fund and surplus. The accumulated fund is not provided, but we have the surplus from the income and expenditure of 24,840. So 24,840. We need to calculate the accumulated fund, which is the equivalent of the capital for profit-making organizations. Now, how do you calculate the accumulated fund? We are going to identify the assets and liabilities at the beginning. Please take note, George. We get the assets, we deduct liabilities at the beginning of the accounting period. So we need a working for accumulated fund. Accumulated fund. The accumulated fund is the equivalent of capital. We know capital is equal to assets minus liabilities, or we can say assets is equal to liabilities plus capital. When you see the subject of the formula, you get capital is equal to assets minus liabilities. So we're going to just summarize all the assets, deduct the liabilities, we will get the accumulated fund. These are assets at the beginning of the accounting period. Assets at the beginning from note number 4. The first asset there is land, is valued at 10 million. Then we have motor vehicles valued at 20 million. Next is the equipment valued at 14.4 million. Then we have buy inventory. The valuation is 880,000. Bank, from the receipts and payment at the beginning, the bank balance is 1,400. Then we have subscriptions at the beginning in arrears. These are assets. In arrears at the beginning, 1840. So we get the total assets. Then we identify the liabilities. We list all the liabilities. From note number 4, the bar payables we have 1.6 million. Then we have subscriptions in advance. Subscriptions received in advance is a liability. Members have paid in advance. They have made a prepayment. The club has not offered services. So the club has received money, but it has not offered service. So the club owes the members what we are calling subscriptions in advance. At the beginning is 2880. 2880. Accrued insurance at the start. Accrued insurance at the start. That means the company has not paid insurance at the beginning of the accounting period. Accrued expenses, these are liabilities. At the beginning is 800. The same applies to accrued electricity. Owing at the beginning is 400. Give me the total. Deduct the total from the assets. That will be the accumulated fund at the beginning. Total assets, there is the investment candidates is an asset. Investment of 40 million, add it there. Then give me the right total. 88,520. Then what is the total liabilities? Liabilities, George says 5680. 5680. Deduct. Give me the accumulated fund. What is the accumulated fund? Is it 82,840? 82,840. Accumulated fund here is 82,840. 82,840. 82,840. Accumulated fund. Liabilities. Then let's identify the liabilities at the end. Look at note number 4. Liabilities. Which liabilities do we have? Liabilities. Liabilities. Note number 4. Creditors is one of them. Creditors. Or bar payables. Bar payables. Bar payables. Let me push this side. 82,840, 24,840. So give me this total first, or you can ignore it. Then the bar payables is 2 million, is it not? Is it 2 million? Then what else do we have? Subscriptions in advance. That is a liability at the end. Subscriptions in advance at the end is 720. 720. You see that? Which other liability do we have here? Accrued insurance at the end and accrued electricity at the end. Accrued insurance, how much is it? Accrued insurance 1,200. We have accrued electricity. Accrued electricity is 520. Then we have accrued wages at the end. Accrued wages at the end 600. Give me the total. The total liabilities. Total liabilities. Total liabilities. Liabilities. Total liabilities. $50, $40. This is 50, 40. Then add to these liabilities the surplus and the accumulated fund. Are you getting 11,720? So that's it for that question that was tested in August 2024, question 2. Please do practice. These questions are very common. There's a question that was tested in April, December, there's a question. Attempt the questions. If you have any challenge, please communicate so that we can help you solve the questions. Thank you. God bless you. Bye-bye.